Hello and welcome to the Monday Futures Market Outlook for July 2nd, 2012. This is Patrick Srezna. For those of you that have not had the opportunity to try out the eMiniSource.com trading room, complimentary memberships are available on the website. As always, we start off a chart of the US dollar index futures, and on that Euro summit, we had a substantial reversal down from a potential upside breakout that we were looking for. This basically puts the US dollar into a trade range style consolidation. We are open to the idea that if this support doesn't hold, that we could see retracements even as low as the 80 to 81 level on the downside during a period from which the euro does a little bit of further upside retracing. Our bigger picture outlook for a bullish US dollar doesn't go away. It just now is going to be neutralized on the short term, and means that we may not see the beginning of a trend move on the upside until the middle to even late July. And so at least the reversal here puts a short term damper on it and puts us much more in a sideways range bound market. Next year, when we take a look at that Euro FX futures, you can see here that the Euro did that substantial reversal on the upside based upon that Euro summit, and that's where that reversal in the US dollar really came in. So far this morning, we've seen the Euro retracing some of that rally. So long as the 125 level holds on the Euro, there is still room for the Euro to attempt pushes back to the previous highs, if not even attempt a push even as high as the 129 and 130 level on the upside. Again, that doesn't change our bigger picture outlook, simply means that it's going to be delayed in terms of when it starts. This further consolidation can continue even for the first few weeks of July, so we'll be watching how this continues to develop here. If there was a sudden and rapid drop below the 125 level on the euro, that would immediately put have a lot of our alarm bells ringing off. Any break of the 125 level could reopen the floodgate, as at that moment anyone would saying that if the Euro summit couldn't reverse the euro, then what will? And it could actually create a substantial downdraft in the markets off these levels if that was to occur. So it's very important that if anyone wants to be euro bullish, that we see these lower levels holding in around this 125.50, 126 area, and reverses back up there to keep things neutral. Next year, I want to take a look at the 30-year Treasury bond, and the 30-year Treasury bond continues to consolidate as the market and all the currencies also do the same. And with the failed breakout attempt on the upside of the 30-year Treasuries, now with this pullback, it is likely that the 30-year Treasury bonds have room to consolidate all the way back down to that 146, 147 level. We could even see temporary drops down to 145, which line up with all those December, January, and February highs that were put in. And nonetheless, there could be obviously even 2-3 handles downside risk here on the short term. We still are going to be bigger picture bullish these bonds. It's just now a matter of letting this consolidation finish playing out before we get bullish these treasury bonds. Next year, we'll take a look at copper futures, and copper had a very substantial reversal on the upside on that Friday rally. Really, at this stage, that again neutralizes the most immediate downside risk of copper breaking down. At this stage, while we do think there's only limited upside potential of copper, maybe back to 360, 370, and at least at this moment, the likelihood of it having a dramatic sell-off will depend very much on how the currencies play out. But here, if copper strengthens up towards 360, 370 on the upside, it would allow there to be a really good short setup off that level. But on the short term, it may very well strengthen here. When we take a look at crude oil also had a very substantial reversal on the upside. Really at this stage, with this type of a very dramatic and strong reversal back toward the 86 level on the upside, it is likely that we have seen a short-term swing low on crude, which will allow crude oil to even go as high as $88 on the upside, and even in the most bullish scenario, it could go as high as 95 to 97. But we certainly are not holding our breath for that kind of a robust rally until the market shows that it has some sort of follow through on Friday's strength. Nonetheless, on the short term, there's definitely room for crude oil to consolidate higher over a multi-week rally before we're going to look at aggressively short selling crude oil again. Next year, I want to take a look at gold futures, and gold futures have found the support again at that 1530, 1550 focal point, where all the lows have come in, not only in May but also back in December. Really, at this stage, we should consider gold relatively range bound, and it's not unrealistic for gold to trade even to a slightly higher high, even pushing up to 1650 to even 1670 on the upside in that consolidation that occurred in March and April. Really, at this stage, gold can stay relatively neutral in this environment, but we will be looking for further rounds of weakness of gold into the latter part of the summer. When we take a look at the weekly charts of the S&P 500, we always like to start off by plotting an 80-week moving average to depict the bull and bear market cycles the market has gone through. We've tested that 80-week moving average and have bounced off it, leaving the market relatively neutral, if not even slightly bullish from that weekly chart perspective. We still believe there's a chance that this level could be violated later this summer, but at least at this juncture, technically we have no violations yet. That brings us to wanting to look at the S&P 500 on a daily chart, and when we take a look here and see that big reversal that occurred on Friday, we see that we've now even broken to higher highs than when we swung in the middle of June. Really, at this stage, it is likely that that the S&P has even another 20 or so S&P points higher upside potential, as it can kind of zigzag higher for a key top retest. And even in the most bullish optimistic scenario, we'll suggest that it could even double top retest the 1400 to 1420 level on the upside. That does leave some room for short-term strength, but we're not optimistic of its sustainability beyond squeezing out all those people that were very aggressively short without having the staying power of sticking in over a short time frame. Nonetheless, we'll watch what follow through. Obviously, if the euro was to have a very fast and dramatic reversal on the downside, that would very quickly have the S&P stalling right at this level right here. But so long as the currencies markets can stay stable, there's room for the S&P to still strengthen a little bit further before we start fishing where the swing high will be on this move. Just in terms of our key intermarket observations, we are at this juncture going to neutralize all of our short-term outlooks on the market. At this stage, while we remain in the big picture bullish the US dollar, and subsequently from that bearish commodities, still optimistic on the upside of bonds, and we are obviously taking that big picture stance on the long term, but on the short term, with the reversals that occurred on Friday, it forces us to neutralize our outlook and allow the market to finish consolidating, and before we become more distinctly biased on the short-term trend. That was your Monday Futures Market Outlook. Thank you for joining me.